Hello, inderesTV. Kempower reported today its third quarter financial report, and I'm interviewing the company's CEO, Bhasker Kausahl. Hello, Bhasker, and welcome to the interview.
Hi, Pauli. Good to see you. Thank you for taking the time.
Well, Kempower's third quarter was strong from a growth perspective. So what would you highlight about this quarter and your performance?
Yeah, thanks, Pauli. Look, I think the things that I would highlight are very strong order intake and revenue growth in the quarter. Second, I'd say return to profitability for us. The operative EBIT is positive, which is up 8 million versus Q3 of last year, and up close to 2 million versus Q2. So sequential improvement and year-on-year improvement. I'd also say operative cash flow. And lastly, very strong quarter for North America again, with very strong order intake and growth. So look, 5 months in, we've been focusing a lot on laying the groundwork for the strategy, the fundamentals that are very important. We've been winning share, and that's been a focus. Driving operational excellence and productivity, and launching those initiatives, accelerating those initiatives, setting targets, achieving our say-do ratios. So a lot of progress that is being made by the team, and I'm really proud of the team, and really pleased with the efforts and that led into delivering the third quarter, a strong third quarter.
Yes, growth looks very good. Then your gross margin declined 5 percentage point year on year in Q3. How much of this was more kind of temporary, driven by component write-downs, or is there any structural trend here?
Yeah. Look, when compared Q3 over Q3 year on year, yes, our margins declined. But if you go back to Q2, it was the exact opposite story. And what's important is kind of the signal. Year to date, we're right in line with actually 10 basis points higher than last year. So quarter to quarter there can be fluctuations, and in this quarter we saw kind of 3 effects. One was a one-time operational expense related to obsolescence of some components that we took. That was the majority of it. Some price and mix effects as well.
Yeah.
So that affected the quarter-over-quarter comparison. But as I said, year to date we're solid. Our goal, Pauli, is overall stay price cost neutral or positive. And the way we do that is when we see price effects, etc. We're regardless driving a whole host of productivity initiatives.
Yep.
Through our operations, through our supply chain, and that's been an area of focus for myself and the team. Really ramping up and accelerating those initiatives, setting up dedicated teams and efforts with clear targets. And so that's what we are actively driving, with the goal of being price cost neutral, positive, and we're going to start to see some effects of the cost reductions also start to come through in Q4.
And seems like you believe that you can actually offset if there is price competition. You can.
That's our absolute goal, and
Yep.
Look, we continue driving the cost and the productivity actions. There'll be quarters timing sometimes, based on pricing of deals and then delivery of deals, etc. And when the cost reductions come through, but again, from a trend perspective, our goal will be to stay, to hold steady on our margins or grow the margins.
Yes. Then regarding the guidance, you revised down the upper end of the 25 sales outlook. So this implies maybe more limited growth for Q4. So what's behind this expectation?
Yeah. Look, as we entered fourth quarter, our backlog is very strong. Our backlog is 117 million starting the fourth quarter, which is 17% higher than at the same point last year. When we look into that order backlog, the order delivery timing, based on customers when they're installing the equipment, when they want the order delivery, a good chunk of that order backlog also extends into 2026, which is great for 2026. In terms of the demand that we have. So we've reflected that in our guidance, the top end of our guidance. But even if you look at what we will grow in the back half with the new guidance, that is in the range of 13 to 21% in the second half of 2025. So that's midpoint. If you take that midpoint, so mid to high teens growth going into next year. So that's what caused it, and so some of that backlog will help us in 2026.
Well, it seems that the direction is good, but there was maybe a slightly slower market recovery if you compare to what were expected in the early part of the year, maybe.
Yes, yes. I mean, the slower, the top end of our guidance assumed a faster market recovery, and that's what was the underlying assumption there. We control the controllables.
Yeah.
And we look to gain share. That's demonstrated by the new customer acquisition. 26 new customers in the order in the quarter. So we control the controllables. We drive that. We're gaining market share through these new customer acquisitions, through the orders that we get, and we will look to outperform the market and higher highs. So if the market's high, we'll be higher. If the market's low, we'll be higher than that. So that's our goal.
Yeah. Then regarding about your new customer acquisition and your position, you recently were selected as a supplier for the largest grid-connected charging site in the US. So how would you describe Kempower's competitive position in that market, where you are relatively new player?
Yeah, very good position. I mean, based on all the feedback I'm getting from the customers, when it's also demonstrated in the results. As a reminder, we started operations in the US less than 2 years back. Our first deliveries were towards the end of 2023. So, to your point, we entered a little bit late into the market, but we're gathering steam. We're really making very good progress. The company's strategic investment in North America is starting to pay off. And what we see in terms of the pipeline, the commercial activity, the feedback that we are getting from our customers. The North American team, by the way, hosted customer synergy days, bringing a whole host of new prospective and existing customers, exchanging ideas, learning from them about the market. That was done just last week. Great feedback, on our products. Customers love our products and our technology, and the capabilities that we're putting in place. So. We're very excited about our prospects in North America and our opportunities to gain share, having started late in the market. So that's what we're executing towards.
Yeah, that's impressive. Yeah. Well, then if you think about the competition in the fast charging equipment manufacturing, have you observed any consolidation in between the manufacturers, also considering Europe? It seems for me that the strong players like you and Alpitronic are growing their share, and maybe some smaller players are suffering. Or do you agree?
Yeah, look, you're right. It's a competitive market. It's a very competitive market with a lot of players across regions, some very regional, localized players, and then some very few that are sort of spanning across globally. We are a global player, number one, right? And you can see that through our growing sales around the world. 70 over like 2/3 of our sales now come from outside the Nordics, where we started and where our roots were. But so that shows our global footprint and our reach and growth there. So in terms of competition, yes, it's competitive. Look, I mean, we look to lead with technology. That's number one. Second, build great relationships with our customers, enduring, lasting, strategic, and service them through the life cycle. So it's not just an upfront product, but a hardware sale. It's also software. ChargeEye, our platform. The services that we're delivering. Through our partners as well. I talked about in the call today around how we are building very strong relationships with our service partners with the view of delivering great results for our customers. So. All of that is what we focus on, look, we're, as you rightly pointed out, we're amongst the top players that are globally addressing the market and growing, and we feel very good about the market position. And as the market grows, continues to recover, we feel our position is very strong.
Good. Then regarding commercial vehicles, you started delivering your megawatt charging systems this year, and there's growing activity in truck charging projects. So do you see a major transformation underway with Kempower's growth becoming increasingly dependent to on commercial vehicles?
Yeah, look, the e-trucks and the e-buses, I mean, you look at that, growing very fast, right? In the first half of the year, new e-truck registrations up 48%.
Yeah.
New e-buses up 38% versus last year. So, the total cost of ownership and across the vehicle segments for trucks really works. That electric the electric mile is cheaper than the diesel mile. So we're going to continue to see that. We are very well positioned. MCS, we talked about that. More power, more plugs. I mean, our technology really shines. ChargeEye, very, very well suited for fleet applications. And by the way, fleet, when I say fleet, it's not just trucks, but it's also, it can be a passenger car or vehicle fleets.
Yep.
So, yes, so we're going to continue to grow there. Look, I think our growth is broad-based. In the passenger car side, when we are addressing, CPO customers, we're very strong there as well. The customers, marquee customers that we've added that are leading CPOs around the world, that are raising funding. You look at Circle K, Lego, and all of the charge point operators. We're in a strong position there as well. So, we're going to continue to address all segments and be strong and not be dependent on just one.
Yes. So maybe it's a more kind of gradual development with commercial vehicles picking up, compared to private cars. Then you plan to hold a Capital Markets Day in the second quarter next year. So can you share any early insight that what are the main focus areas in your strategy process?
Yeah, we're making excellent progress. I've been working very closely with the team, to really chart out what's next. What's the next phase of strategy for us? And the work that we are focused on is really building the fundamentals. What next on how do we drive the best-in-class differentiated technology? What are the next generations of products? So we've got a very exciting list of projects, ideas. So we're working on the investment plans and how do we accelerate that. Second, winning with customers. How do we gain share? Market-leading margins. Productivity in our operations, how do we drive that? So we're launching initiatives, we're setting targets against those, and we're building that execution discipline as well. That's very important for that sort of credibility that we need to build, hit, deliver, set targets, hit those targets. And so all of that work, and then really also around the culture, and the operating model. We're looking to make adjustments where we need to, for the next phase of growth of the company to really position us. And as the market continues to recover, grow, we'll be right there to capitalize on all of those opportunities. So that's kind of the underlying work that is growing, that is going on. Ultimately, all of these things, as drive kind of the value creation framework for us as a company, and how we're gonna drive returns for all our stakeholders and our shareholders. So. That's what we are laying out, and then in the Capital Markets Day, we'll bring that all together and discuss and share that.
All right, thank you very much, Bhasker.
Thank you so much, Pauli. Again, pleasure to have you, and great talking to you. Thank you, everyone.